Good morning, traders. This is Tony D from easyMarkets here in Sydney. TraderTalk today. We have the big event. Big event of the week is the ECB coming up tonight, 11:30 Sydney time. You have the beginning of the tapering. It's widely announced. It is going to be the potentially start there of the end of the easy monetary policy cycle out of the Eurozone. What is important is not so much the taper announcement, but the size of the tapering, which should begin in December, and also the length of the extension. If you get an open-ended extension and not a very large cut in QE, that's a lot more dovish, a lot more bearish for the euro than if you get timed out max limit on the amount of bonds that are going to be bought, if you get extension for only 6 months, or if you get a cut bigger than 30 billion from the current 60 billion, then the market will react in a quite positive manner. Also, some of the terminology that he uses to describe how they're going to adjust their tapering in coming months is also quite important. Really, what this all debate is about is how long into the future until the ECB is going to be raising rates. Are they going to be raising rates next year, or is it till 2019 that they'll be raising rates? At the moment, the market's definitely priced in lower for longer. So see the euro, which is enjoying some nice gains at the moment, is probably just more positional adjustments than any sort of preemptive we want to be long into this event, because it's no longer such an easy slam dunk that the start of tapering is going to be positive for the euro. In fact, if he says the right things, the market could easily start to sell the euro in what is a strong US dollar environment. And in fact, the euro has been holding up extremely well compared to most of the other currencies, which have seen significant US dollar gains. All right, so I'll be sending out some research and writing up a little bit of a trade guide on how to do this one today. If you're a member of the ATG, you'll receive that shortly. But basically, we're looking at what he says and then the price action. If we do get selling, don't be afraid of hopping on in that because the market has a lot of room to move if you are to break down below the 116.80 level. As you can see on this chart, the recent rally has been all the way from 105 this year, and that any pullback or any giving into the US dollar strength will lead to significant selling. In terms of the what's driving the US dollar, we did see the US 10 years break back above 2.4%. That's one of the highest levels this year, and was seen as a key resistance level. So the chances of the US dollar extending gains in coming days on the back of a tax plan or tax plan progress is very likely. November 1 has been highlighted as the potential time for a vote on the first version of the tax plan. That could be interesting. Given that at that stage that's next week, into the same week we get the NFP and probably have the new Fed chair. So there's a lot going on in the US dollar side of things. Let's see if the euro has its own little volatility spurt coming up. But I think the bar is set pretty high here to get a hawkish response from the markets in regards to QE. It would be a bit of a surprise if Draghi doesn't have the awareness to try and be a little bit lower for longer in terms of his language. The other big moves overnight, Aussie dollar's broken back below 77.50, seen as a major support level and a major resistance previously on the way up. Now we've turned into a breakdown here. The 200-day moving average is still holding around the 77 level, the 200-day moving average at the moment. And the market has got a little bit of relief here, as there has been some profit taking on the US dollar, led by that euro and dollar yen pulling back from 114. But overall, there's a lot of interest to sell now, back up now towards that key, the resistance. So once that level broke on 77.50, you can see that it will become a natural selling spot if you're looking for a way to get involved in the new trend. The Kiwi dollar has also continued its selling back below 69. Has found support though towards the 68.60, 68.80 support zone. This support zone is the same level that held it on the previous sell-off. You have to go back weekly there, all the way back to April to see the previous time I was down here. But the news is of the kind which is systemic, and it is likely, if there continues to be more negative announcements coming from the new government regarding their influence on the RBNZ, that the Kiwi will be under pressure. The other commodity currency which also joined into the sell-off category yesterday was dollar CAD, shooting higher on Bank of Canada's concerns about inflation being lower for longer than the 2% target they have because of the recent appreciation of the Canadian dollar after they started raising rates. So you see here, the dollar CAD fell from 136 down to 123, to 123 and 122. The market then started to see slow inflation, so less impetus on the Bank of Canada to raise rates, and what that led to there is relief rally here, which is still pushing higher, looking for resistance. We still haven't found that solid resistance yet. We did break above that previous high in the recent downtrend, so now we're looking onwards and upwards. 130 is a natural target if you are bullish in the camp here in the short term. Finally, we did have a little bit of volatility in the pound overnight. It's sharp gains coming on the back of stronger than expected GDP numbers. Now, the reason why this is important is that this is the last number that we had out before next week's Bank of England rate announcement on Thursday next week. Then that's likely to be a rate hike now. 80% to 90% chance of that happening according to the bond market, and they have signaled that that's going to be the case as well. So given the current environment, the only negative Brexit news, and it's not really negative Brexit news, it's lack of positive news in Brexit that's holding back the pound. If we do get some developments in the coming days on pound negotiations having breakthroughs, then this could be the biggest mover next week and to the top side. Alright, guys, if you want to talk about some of the crosses in play, or if you want to talk about some of the other trades that are going on, there's a lot of movement here happening in the last 24 hours, and of course the ECB is going to be a tremendous story today. Please come through to the dealing room on the contact details below. If you're not a member, join up with the link below to the Active Traders group. Thank you.